To truly understand the Dubai's property market, one must look beyond local trends and statistics. A sophisticated and strategic view requires placing Dubai within the broader context of international real estate. This is a dynamic, useful, and fast-growing market, and its future cannot be reliably assessed by looking solely at its short history. Think of Dubai as a rapid developing child. You wouldn't predict a child's future well-being simply based on their past year. Growth at this stage can be both rapid and unpredictable. Instead, we gain better insight by comparing this child to others of a similar age. In real estate terms, that means looking at cities with comparable natures and have passed through similar stage of transformation. Dubai is a purpose-built city in a relatively young nation. It serves as a regional commercial hub, but does not benefit from deep reserves of natural resources. Instead, its greatest asset is its people, an overwhelmingly immigrant population that lives, works, and invests in this ambitious city. This creates a market that is global in outlook, diverse in composition, and responsive to international trends. Cities like Hong Kong and Singapore offer relevant parallels. Each is a small, strategically located hub with few natural resources. Yet they become global powerhouses through visionary urban planning, strong infrastructure, and investor-friendly policy. Dubai shares this DNA. From a regulatory standpoint, the United Kingdom also serves as a strong benchmark. Dubai's property laws, from ownership structure to escrow protections and regulated agency licensing, have been heavily influenced by the British system. To succeed in Dubai real estate, you must adopt a global perspective. Don't study Dubai in isolation. Look outward. Analyze the evolution of global cities that share its characteristics. Only then can you understand Dubai's trajectory and make decisions that are as forward-thinking as the city itself. With this in mind, let's look at some of the most asked questions about Dubai property. The first question is Dubai's property growth sustainable? In short, yes, provided the city continues to build on its current fundamentals. Dubai's rise has not been driven by natural resources, but by deliberate and well-executed strategy. Through infrastructure development, progressive immigration policies, and its positioning as a regional center for finance, logistics, and tourism, Dubai has become a magnet for talent, capital, and commerce. In terms of physical scale, Dubai spans an area roughly 4 times the size of Hong Kong, yet its population remains just under half. As of 2025, Dubai's population is estimated at 3.7 million, with projections indicating growth to approximately 5 million by 2040. This suggests ample room for growth both physically and economically. However, investors must remain aware that Dubai is highly exposed to international forces. This global appeal brings opportunity but also volatility. For example, the 2008 global financial crisis and the COVID-19 pandemic saw significant drops in property values across certain areas in Dubai. Conversely, the post-pandemic recovery, combined with geopolitical instability such as the Russian-Ukraine conflict, accelerated demand and created a substantial property boom from 2021 onward. Key takeaways: long-term, monitor demographic trends, infrastructure expansion, and economic diversification. Short-term, stay attuned to geopolitical and macroeconomic shifts, which can impact investor confidence and liquidity. The second question, what types of properties in Dubai will hold value over time? Property at its core exists to serve people. It must provide comfort, functionality, and relevance over time. A successful real estate investment retains or grows its desirability. Here are the characteristics of properties that will stand the test of time in Dubai. Prime location. Focus on areas with lasting demand. Locations such as downtown Dubai, Business Bay, and Dubai Marina benefit from a concentration of economic and lifestyle activity. As long as this neighborhood maintains their status as commercial or leisure hubs, they will continue to attract end users and investors alike. Developer reputation and master planning. Dubai's harsh desert climate presents unique challenges. Inferior construction, especially in standalone buildings, often results in premature deterioration and increased maintenance costs. In contrast, development by reputable developers offer integrated environments, combining residential units with retail, schools, green spaces, and public infrastructure, creating more resilient, desirable, and valuable communities. Quality and condition of built assets. Age alone is not a disqualifier, but in Dubai's environment, building materials are subject to intense stress from heat, sand, and humidity. Older buildings must be assessed carefully, especially in terms of insulation, air conditioning system, facade integrity, and service charge structure. A poorly maintained older building can undermine yield and capital appreciation. Supporting infrastructure and services. Properties that offer access to well-maintained roads, good schools, and community facilities hold greater long-term value. Well-managed communities offer an elevated sense of security and lifestyle appeal. In this desert city, real estate is not just about the apartment, it is about the environment it sits within. The third question, what are the risks to watch for? While Dubai offers considerable opportunity, investors must approach it with measured judgment. A few key risks merit particular attention. The first one, global sensitivity and volatility. Dubai's international appeal means it also reacts quickly to global events. Inflows of capital can be sudden and significant, but the reverse is also true. Price corrections can happen swiftly if sentiment shifts. A long-term investment perspective is key. Oversupply in emerging areas. Certain emerging zones in Dubai have seen rapid development. While some of these areas offer affordability or future potential, others lack infrastructure and demand. Conduct detailed due diligence before investing in emerging districts. Regulatory changes. Dubai's policy landscape is evolving, typically in favor of investors. But it's important to stay informed. Visa reforms, foreign ownership rules, and tax policy can all influence the market sentiment and investor eligibility. Climatic and environmental considerations. Desert conditions place a burden on building materials, system, and maintenance costs. Ensure any property you purchase is engineered for longevity with heat-resistant designs and efficient cooling system. Final thoughts. Dubai is more than a city. It is a living blueprint of a 21st century global hub. Like Singapore in the 1990s or Hong Kong in the 1980s, Dubai stands as a crossroad of vision, capital, and infrastructure. The city is still growing, both in size and sophistication. And with that comes opportunity. But sound investment demands more than enthusiasm. It requires perspective, discipline, and the ability to filter signal from noise. At EGRE, we guide international investors with experience, integrity, and a grounded understanding of the global property markets. Whether you are exploring your first investment or expanding an existing portfolio, we're here to help you make smart, strategic decisions.